I'm Charlotte McLeod with the Investing News Network, and here today with me is Brien Lundin, editor of Gold Newsletter. Thanks so much for coming today.
Great to be with you as always, Charlotte.
Good, and we're here at the Sprott Natural Resource Symposium in Vancouver. We had a Fed meeting today. We had a rate cut.
Yeah.
What does that mean for gold?
Well, today it wasn't that good for gold because they did the rate cut and then kind of positioned it that this won't be a long series of rate cuts, like this was a one-time thing. But I don't think that's going to last because the stock market has shown that, or Wall Street in general has shown the Fed that it's in charge. It needs more and more easy money, and sooner or later, and probably sooner, the stock market's going to tell the Fed, deliver the message that no, it needs another one, and then another one. And so once it starts these kinds of rate cuts, it's usually a long-term trend. And I think the market will turn to appreciate that over the coming days and weeks.
Right, and we haven't seen a cut for quite a while. Are we going to be heading down a similar path as we...
Yeah, I think so. The Wall Street pretty much controls the Fed at this point, and I think that's become obvious. And they'll throw a temper tantrum if they don't get another rate cut at some point, so it's just a matter of time.
And for gold prices, what could that mean as we head into the rest of the year?
The rest of the year, higher gold prices. The rest of the following year, higher gold prices. I think what we have here is a long-term trend of easier money, lower interest rates, and eventually, most likely in the next economic downturn, more quantitative easing than they've ever done before. All of this is tremendously bullish for gold prices and metals prices long-term. Effectively, we're in a position now with the size of the federal debt in the U.S. and really the debt, sovereign debt around the world, that we can't survive higher interest rates. The cost of servicing these debts would be at higher rates, would crater federal budgets around the world, particularly in the U.S. So the era of anything close to normal interest rates is well behind us. From now on, we will have ultra low to very negative, significantly negative real rates going forward, and that's going to be tremendously bullish for the metals.
Is there a price or a price range that you would be willing to put out there for the rest of the year?
I can give you a date or a price, but not both. No, I think that once we get past, I think gold's consolidating in this area. It'll be very comforting for us gold bugs if it stays above 1,400 through this consolidation. If it manages to do that, I think 1,500 is the next obvious target, and I think we can get to that point by the end of the year, I think.
Okay, yeah, lots of people seem to be saying that. It looks like that's becoming a safer bet. So when you look at gold prices and you're forecasting gold prices and that kind of thing, there's so many things to look at. One of the things I think investors may not know as much about is the technical analysis.
Yeah.
What can you tell us about that?
Well, for gold, we had some very strong resistance points around the 1350 to 1375 area, and gold blasted through that. And in fact, I predicted in an interview with you at PDAC this year that once it got past 1375, it would quickly get to 1400 and beyond. And it did that. In fact, it did it in about a day and a half. So that was very impressive. So at that point, getting past 1,400 from a technical basis is very important to the generalists in the world, the people who don't follow gold but follow the charts, and they look at it and they see that there's not much resistance over $1,400 until you get way up to around the $1,700, $1,800 level. So there's a lot of room to run, and I think it's been apparent that gold is attracting a lot of generalist interest into the market right now. If it maintains this upward move, if it maintains above $1,400, creeps up toward $1,500, I think you'll see more and more money coming into the sector. And as we've seen, it doesn't take much new money allocated to gold because relatively it's such a smaller market, so it can really move on just a very small shift in allocations toward the sector.
If you're an investor and you want to sit down and take a look at charts and things like that, what's a good place to start? How should you even begin to do that?
Well, there are two sources that I use. One is thechartstore.com. A good friend of mine, Ron Grease, runs that. He has a subscription service. I think it's a couple $100 or thereabouts a year. And he does a weekly chart blog that covers everything, all the financial markets, the economy, really interesting things you don't see everywhere else. For gold specifically, Nick Laird's service, goldchartsrus.com, is very good. It's kind of the definitive chart service for gold and silver and all of the associated indicators.
Okay, perfect. So we mentioned we're here at the Sprott show right now, and what people seem to come here to learn about is where they should be putting their money. Mm-hmm. If you're a gold investor right now, what should you be doing to make money?
Well, I think we're in a very interesting, very attractive spot right now in that gold has confirmed its breakout on a technical basis. The mining stocks, the large cap mining stocks, have confirmed it by offering leverage to gold's move. Silver recently, over the last couple of weeks, has started to move on its own very powerfully and make up that gap and outperform gold. That's kind of the third leg to a three-leg stool as far as confirming a real secular move in gold. So we have that move confirmed, yet the junior mining stocks are only starting to respond. There's still bargains galore in that sector, and I think that it's just a great opportunity for investors in that we know that gold's rallying, the metals are rallying, silver's rallying, but you can get tremendous leverage to that move still by getting into the well-positioned juniors.
Okay, and that leads into my next question. I don't know if you can share one or both of these, but we're looking for your best and your worst investment so far this year, if you could share.
Oh, the best and worst. I would guess any investment that's leveraged on the U.S. stock market at these heights, that would be, at some point, that's going to be a really bad investment. As far as the best investment, if we get really specific, I recently invested in and recommended Aftermath Silver. It's an emerging silver play. It's been around a long time, but it's been rejuvenated with two new silver projects that look very good, and it's starting to get a lot of buzz, and I think that's got a lot of upside to it.
Yeah, I have been hearing more about silver in general here,
Yeah.
and I think Rick Rule was saying yesterday there are just not that many pure silver companies that you could look at, so very interesting.
No, there aren't. In fact, Rick Rule and Jim Blanchard started the first pure silver play, Silver Standard, back in the early 90s. And I was in the room when they started that. And that of course, is SSR mining today. Pan American Silver was begun at about the same time by Ross Beatty, who had this exact same idea. But no, there's not that many. There are more than there were then. There's maybe 10 or 12 out there you can find. But they are highly leveraged to silver. Silver's been down for so long that a lot of these companies have either been making no money or even losing a little money at prevailing silver prices. So once silver gets above their cost of production, then all of a sudden their margins explode to the upside. So those are the kinds of plays right now that look really good and have a lot of rocket fuel behind them with silver's move.
Right, and we do hear when gold goes up, silver usually goes up more. So.
It really does. It's leveraged to gold. It's like an option, non-expiring option on the gold price. And if you think gold bugs are crazy, silver bugs are truly nuts. That's kind of a long-known adage in the industry because it's much more speculative than gold. Of course, it falls more quickly than gold when gold is falling as well.
Okay, well that is everything from me, unless you have any final thoughts that you would leave the audience with as we head into the final half of the year. I
would say buy the juniors now while you can.
All right, well thank you so much. That was great as always. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Brien Lundin of Gold Newsletter.